All right. Happy Friday, everybody. Today, going to do something a little bit different. I've been in the lab, so to speak. I always get asked this question, how high can this thing go, whatever the price of the asset may be? And I usually kind of leave that open ended. But I got to thinking about volatility and how volatility is the best way to kind of predict. Well, I wouldn't say predict. The best way to kind of foresee and model. There we go. Model future price action. Okay, we never know which way something's going to go. But I vibe coded up a little something in TradingView that we can look at, and I'm going to try to answer that question and look at a couple of assets in the past to see how this modeling worked and what it says about the things that also is on everyone's mind right now going into the future. So hang out for people to filter in. We're going to look at that along with your symbols, and we'll kick the weekend off with some thought. All right. Looks good. Looks good. So this is kind of the indicator that I made. I totally vibe coded this. So I'm going to, of course, give this away for free. I'll make a publish of it on TradingView. But we're going to talk about why I made this because the question I always get is like, well, everyone wants to pick targets, whether it's up or down. And people have always asked me, well, how high do you think something can go? And, there's a kind of a classic answer where, they'll either guess, or the other way to sort of put a number on it would be Fibonacci extensions or something like that. I've never really liked that very much because I don't know, it just doesn't work for me. Don't really vibe with that because I've always been, if you're long an asset, I mean, that's there is no limit. I mean, they could just keep going up forever. And so I don't really put targets on things that I own, like stocks and things like that, or other assets. I mean, unless you go, because you need to sell them, but kind of in the Warren Buffett style or in the Bitcoin hodler style, you just never sell. And so, but still, it kind of helps to know where something might go. And the best thing, the only thing that we can use to model that is the past, and specifically the metric volatility. Now, what I wanted to do is I wanted to take historic volatility, and that's basically the realized volatility, how it's actually been volatile. An asset has been volatile over the last period of time that you give it, and then use that, chart that out into the future. Because what's going to happen is, there's going to be a sort of a range, essentially, time versus where this price may go, right? And so usually these volatility things will look something like this, okay? Because within the volatility given time, it can go either up or down, and then you have standard deviations. What is the most likely thing to happen? What is the 68% probability this thing's going to go higher or low? And options are of course based all on this, the pricing of options, and they use implied volatility, which is different but closely related to historic volatility, because historic volatility informs the implied volatility to kind of price the probability that price will go from one direction to another. And we're going to be the purpose of this is to be entirely neutral. A lot of people, if they're sentimentally, they have a bullish sentiment, then they're gonna project, up or down. But you have to understand that volatility is a double-edged sword. Because something goes up a lot means it can go down a lot. Hey, what's up, everybody? And I like your name, by the way, Outshine Skeptic. I like being skeptical about stuff too. So, by the way, if when you come into the chat, what we do every week is we look for opportunity. Okay, so for the latter half of the live stream, I like to look at y'all's symbols, do a little update on the stuff that I've been buying this year. I take a more long term perspective. I will do some day trading. I haven't for the last couple of months. Okay, it's been kind of boring. But when the volatility index starts to pick up, I'm going to come back to futures. I took one futures trade last week, a little short trade to see if I could, wake the bear. Took a little half profit on it. But this week, excuse me, new all-time high on stocks, at least on the S&P 500 futures. So the bear has gone back to sleep, and now we reset our counter to see if we're going to get a false breakout. There's only two options, and we'll look at the markets here after I go through the topic. But there's only two things that can really happen at this point with equities, I think, based on over a decade of watching this kind of stuff. Option one is a slow grind up. Option two is we get a pullback, and a pullback is what I'd like to have for opportunity to buy going into the last part of the year. But when you have situations like this where there's not really much FUD going on. I mean, you had tariff announcement last Friday. Ooh, big whoop. No real big, or was it 2 Fridays ago? It's 2 Fridays ago. Sorry. No big deal. No, it's all the gain, all the losses have been gotten back, except in crypto. Bitcoin has not got reclaimed its losses from the Trump tariffs. Neither has Ethereum. What about Monero? Monero has almost. Monero has. Monero is just a plucky little crypto that refuses to die. It's my favorite. It's my favorite. Very, very much better performance. So anyway, but put your symbols in the chat for the latter half, and we'll get to it. What's up, Zagor? Good to see you, man. Good to see you again. All right, let's talk about the topic at hand, what I made for you guys for your consideration. So I wanted to model what could be a potential target, because, and of course, this is influenced by me immersing myself in the Bitcoin space and things like that. Because anyone that's bullish on Bitcoin, what's the next target? Obviously, $1 million. Okay, but how and when is that really likely based on the actual volatility? Now, the realized volatility of Bitcoin over the years has been going down, and that's been good for the drawdowns being smaller. I mean, the first drawdown that I went through was from 20 something dollars down to $1.94. And that's about a 90 something percent drawdown. I was kind of dumb for putting my good dollars into magic internet money, losing almost 94%, but it popped back up. And then you had an 85% drawdown. Then you had a 74% drawdown. And but the drawdowns are being less and less because the realized volatility of Bitcoin has been going down. But that's also where if you want to have something 10x, you need a lot of volatility to happen. Okay. Because it's going to, when you have a big move up, volatility is going to expand. That's what this line down here is. So we're going to start here. So down here, I have a little indicator. This is all stock for trading view. It's historic volatility. All right. So one thing I found, my keyboard broke, is 180 days. We're going to do a half a year, 6 months. I like long-term stuff. It also smooths out the volatility. Sure, Jeremiah, not Jebediah. I'm thinking about Kerbal Space Program. Sorry. I've been watching videos of that. I used to play that game a lot. All right. And so that's been kind of, and you notice how as Bitcoin, we're looking at Bitcoin here, big old volatile Bitcoin. And you notice how when you had, this is a daily chart, and then going back here, you have the low, basically where Bitcoin was going down, down, down in the last bear cycle. That's when volatility was high. But as it starts to kind of recover, that 6-month volatility is going to go down. And now we're actually at a very low point of volatility. And that's just because you haven't really had very much change up or down as over the last 6 months. And that's what volatility does. It's volatile. Okay. It's either moving a lot or not moving very much. Okay. And then what I did was I drew up an indicator that would basically draw me different ways of looking at, what does this imply going into the future? Okay. So this is the bands that it came up with. And the blue is going to be one standard deviation. That's the 68% probability. And then the orange or yellow is going to be these 2 standard deviations. That's what, the 94%. And I'm not a statistician. And then the red is going to be 3 standard deviations. That's like the really extreme probability. So we're just going to look at the 1 and the 2, not the 3 and the 4. And that is basically the range that the past 6 months of volatility, as it stands right now, implies on Bitcoin. But I really want to go back in time and kind of walk through what I found, how this can be useful for modeling, the future. Like when you get into a bull cycle, not just of Bitcoin, but anything else, picking targets. Okay. Because, and what is making it more reasonable and fixed instead of just arbitrary, like 1 million, I think this can be really useful actually. So let's go back in time. Let's go back in time. And I really want to go way back. Let's go back to ancient history. Really kind of play it out. So let's look at, let's do, let's not go back that far back. So I'll show you what I kind of worked together as a strategy. Let's go back to the last bear cycle ish. 2020, or actually 2019. Okay. So from 17, the bottom, and let's go look and see what we come up with. So one way we can visualize it is this way. And what I was doing was, we'll just do the 1 standard deviation, is I was going forward and saying, okay, let's make sure that, 1/8. Let's do the 6 month. Okay. Project it out once. Okay. Now here's what we can do. Trying to use keyboard combinations, but we say, okay, here is the range that the past volatility would imply. Okay. So you got price, and then volatility is about median for what it was, about 69% historic volatility as of this date. This is January 2019. And so this becomes the range that you would imply that that Bitcoin could have gone from there. And so we're going to go forward and we're going to see, and granted, this can happen within 6 months or not. And let's go forward. And so we're going to sort of see, what this would do is if you were to say went long or short, you would have basically said, okay, that's my price target. And then once you hit it, Now volatility should have changed and you can start to update your projections going forward. Okay. So now that you finally got to 58, now you could probably say, okay, now the new range for my targets would be, let's see, 9,800 to here. And so let's go forward from there and see. And then once you hit it, then you could probably update and say, whoop, whoop, and then up it goes. Now volatility is probably really going to expand from this point forward. All right. And so what we could do is project that out. Let me show you the different way of that I put into this thing as well. These bands. Now this creates some interesting chart art where you can find potential points of support and resistance. Okay, where volatility begins to level out. And so, as price begins to kind of level out in here, now we can say, all right, here is maybe the area where like that becomes a point of volatility that we could use going for targets in the future. And so let's just see how that pans out there. Again, we're being neutral about up or down because volatility is a double-edged sword. All right. And so we're going to say within the next 6 months, that's going to be the range that it goes. All right. Let it play out, consolidates. And did we hit? We didn't hit our volatility point there. Boom. Okay, so we hit the bottom of that point of volatility. Okay, and so now as we're kind of playing it out, let's reevaluate. Now our range comes to here, and so where do we go from there? And so that becomes our new range for the next 6 months. Then you can change it from 6 months to 30 days or whatever. But I like the 6 months for like long-term cycles or charting the cycles as well. They're in the range. Boom, hits down to that point of volatility. It's going to be. I kind of went ahead and I didn't do. I promise I didn't do this section of Bitcoin. I actually did an older one, like back 2016. That's phase of it. But I decided to do this fresh. But it's going to be really cool because I did the S&P 500 futures, and you're going to see something cool about that because S&P 500 futures, because options on the SPY are just there's such a prevalent derivative. You're going to see sort of the tail wagging the dog, so to speak. It's sort of a self-fulfilling prophecy where these volatility or where uh, these volatility points may be. So we're back in the middle here. Just an arbitrary time. Let's just say now we kind of stabilize here and here. So you guys should be getting the idea for how to use this. I'm going to publish this. I'll put it on Discord in one of my channels to use. But this, I think, I'm going to use this going forward when I'm in something and I want to say like, okay, what's going to be my long-term target? Like, what am I looking for in terms of like the next several months there? So we hit the upper band of volatility and we can, let's just say, it does probably doesn't hang out there because that's 2020. Yeah. But yeah, I wanted to look at one thing. Now, this could also work in stocks as well. And so let's go back in time. Do you guys remember? We don't need that down there. You guys remember NVIDIA? AI? So NVIDIA was all the rage back in, yeah, NVIDIA does fix this. Well, let's look at NVIDIA. Okay. So NVIDIA earlier in the year, okay, January, everyone I was talking to was trying to go long NVIDIA, right? Because that was still all the rage. And of course, now going forward, it being at 186, we know that was, of course, the right thing to do. But it had to do a pullback first. And so what I think is interesting, if you look, the range, so basically the range would have been from January the 25th, using the historic volatility for the last 6 months, that would have been sort of the range that we would have wanted to expect out of this from 93 up to 232. And I found it very interesting that, that was actually, did that match up? I think it was. I think it may have just barely touched the bottom of that range right there, was within what we could have predicted. Excuse me. I don't want to use predict. I'm not, this isn't the weather. We could have modeled the bottom of NVIDIA to be. And of course, at that bottom, then we could have said, okay, well, now what's this new range? Because volatility, of course, when price went down, volatility increased. That's going to widen our potential range. So what did that imply? What did that imply? Price went down, so that's this there, target there, 160. And just a little bit above the high. And of course, we know it hit that too, but boom. Okay. So well within that range of possibility. All right. One more example I wanted to kind of point out too. Let's go to the beginning of the year. So this is the beginning of the year for or February of this year in S&P 500 futures. Remember where I said how there's oftentimes the tail wags the dog, the derivatives maybe inform the price action of the underlying. And so, yeah, so I found it interesting that actually, where was it? We're using, I don't want curve fit too much here, but what was I doing? I think I was using that. Hold on. Maybe I did we can change the bars around here. Now I'm curve fitting to show something cool. You know, is this, let me make a sin. Okay. What I found interesting was if we go to the beginning of the year, hang on, let's just start from the January. Okay. And we're going to draw out. This is the first standard deviation. And then we will add an extra line for the 2 standard deviation moves. There's something I found here when I was doing this testing of it. So when we first had the first pullback, it hung around, I believe, the first standard deviation move from the beginning of the year. And then the second one came down to the second standard deviation move. Again, probably informed by options, essentially. It might be the 30-day, but yeah, that didn't play out the way I wanted to. Hold on. ES one standard. I thought it did from January 1st. I tried to note that. Hang on. Let me go back and redo this. Any questions, by the way, guys? I'm glad that you found this interesting, Jeremiah. Yeah, this is what, of course, going back, I wanted to kind of really sort of model and give sort of a more fixed answer to like a lot of these, where do you think this price is going to go sort of questions. And again, like I think that if you're trying to pick a target, this makes a lot of sense for keeping you rigid in whatever rules you're going to apply to yourself. Because at the end of the day, it's about having a rule so that you don't just sit there and let emotion take over. All right, so let's go to the beginning of the year. And the start of the year. Boom. To boom. Boom. To boom. And so that's the 180-day. No, oh, well. Didn't really work out that well. There we go. Sort of. Not written in stone, but yeah. So I'll post that on Discord. But yeah, but again, it comes back to trying to model, where do I think, or where could possibly over the next 6 months could Bitcoin or any other crypto go? That is the question that we're trying to answer here, or at least what's kind of modeled after. And so what I find interesting, if we look at, well, let's do this. Let's do our straight projection. There we go. Okay. If we do, there's the lower end at 87, the upper end at 139, and the super duper upper end, the 2 standard deviations, is 175. That's just a given, right? And then the lower end is 69. Okay. And again, what I find cool about this is already kind of matches it. Like upper end targets are really hard to come up with because there's no past price action to kind of go on. So that's the best things you can go to. But I love pullbacks. As a contrarian, I want to catch things on the pullback. And so what I find interesting is that if we start to use my other analytical techniques that I know and love, if we use a volume profile analysis, let's here, and we even use a 50% retracement from there to there, we start to get a lot of confluence around either around the 67 line. And what that would be interesting to see is if it comes back to hold the top of that range. It's the 50%, it's a volume profile, and it's also from this point the 2 standard deviation move. I think that would be some interesting fun, but things could pick up again. I try to be a will see Chad in all things. So yeah, that's what I had put together for today's research outside the lab. Yeah. All right. What's up, Wolf Pup? Well, a quick overview is I'm explaining this theory crafting about price target finding using historic volatility. And because we now have the tools of superheroes, not superheroes, but like we have the ability to tell computers what we want and then spit out code and then fix all our errors for us without us having to actually learn Pine script. I was able to put this into an indicator that can very quickly draw out the lines. Because what I had been doing before is I've been going and calculating, okay, from this date, given this price, given the historic volatility, what does it imply the range? But we can just easily code this into TradingView. So yeah, I like it. I like it. Anything? Oh, let's see. What else do I have with there? Take a look at let's look at gold. Let's just take this one more thing to look at, and then we'll start looking at you guys symbols here and doing a check on things. Numbers really just changed like big things. I mean, I think Beyond Meat had something this week. I'm not going to catch those kind of things. Let's go back to this big high that gold had. Okay, and of course this is the 6 month right here from this point drawing out. And so let's draw it, see how from April of this year, when we had a big move up and volatility, historic volatility for the last 6 months as of April was very, very high. So let's just see how did the was it? Yeah, it's about 6 months. No, yes, April to now October is 6 months. Yes, we'll see how that played out. So we got the high end, the 2 standard deviations, and we've got the lower end 2 standard deviations. And let's draw up I'm trying to let me train myself to use keyboard combinations. There we go. Okay, so let's play it out. Oh, it looks like I captured a clip on doing that Alt C. All right, so boom, hit the first. And it just barely missed our 2 standard deviation move from that point implied by historic volatility. That is interesting. That is interesting. One of the reasons I did two ways of doing it, either the forward, like little wedge, but also the envelopes is so that I could potentially try to find like support resistance levels. But let me clean that up. It gets a little busy. I like charts to be nice and clean. It's kind of hard to really. Let's go back in time. Let's see if that would have been useful or not. Again, this is from the lab. This is me in the lab today. Okay, so yeah, so this was April. Yeah. Could I potentially find supports and resistance? I would maybe look for, if I was going to do this, I would probably look for maybe nodes where price kind of uh, consolidates around that point in the future. Like for instance, if we go forward, price is going to kind of level off here. So that maybe creates another target. These are just ways that kind of come to mind that I would use this. I haven't incorporated this into my trading obviously yet, but this is one of those things that might get incorporated into it because that is the age old question. What are the targets? What are the targets that how high can something go? And so, gold being the one that kind of knows, here's the thing. It could still get up to that point, actually, 4,400 gold. Yeah. When do we get access to the indicator? I'm going to post it. I'm going to post. So I'll publish it and I'll share the link. In fact, I'll do it right now. Let's see, because I haven't I actually had someone send me a message on trading. Go, why have you posted it a long time? Yeah. Let's see, where do we go to? Publish. That's right there. All right. So what are we going to call this? What do we call it, guys? HV Sigma bands. I think it was called Sigma bands. That sounds better. Sigma, we can be Zoomers and we can say this is for true Sigma males, right? All right. So this is how do we want my song from? What do you want to say about this thing? So the prices are always moving. So when do you know when to mark this? And oh, well, hopefully I answered that question right there. Basically, I was saying like this is how I would start to. I think probably what you would do is you would, when you take a trade, and let's say that it's you're going bullish on something and you don't have like a resistance that you know about. At that moment, you would use this to say, okay, my target is 6 months out or 60 bars out, one standard deviation move. And that kind of locks you in, like this is going to be my target. And from that, you can calculate your risk. So it's really useful for things that are just making new all-time highs, I would say, to kind of see, okay, let me give myself some discipline. This is about discipline. Like here is what volatility implies it may go down to, and also can give you an idea for, okay, what's the downside potential? What is the downside potential implied? So yeah. All right, we'll look at the symbols here in a second. Let me publish this for you guys. So Sigma bands. Let's do Sigma volatility bands. Gosh, I can probably go back and edit this, right? Let me write this up because it may not let me edit after, but I want to be as informative as I can. I don't want to take up stream time thinking about what I want to say. So, all right, I promise I'll publish this and we'll put it out there. All right, so we got symbols to look at, but yeah, I hope you guys find that useful. I'm gonna publish that for you guys. All right, I'm gonna take that off. I'm gonna use the old school ways now. Okay. Exit bar replay. Change back to auto. Yeah, gold. Oof. Well, I'm looking at gold. Real quick with silver. Silver needs to, I got again, a lot of my friends, big silver bulls. I want you guys to be, I mean, you are like rich now, right? Like you've had, I mean, a lot of my friends, they've been in silver for, since the mid-teens. And so basically you've gone from 16 to 49. So that's about a 200% gain up here. So you're rich. But you need to watch this price action. We got one more week. We got one more week right here before this monthly bar is going to close to confirm or reject the all-time high. Is it the all-time high? Yeah, it's all-time high. So yeah, I just can't help but see this and think about Monero. Just that kind of character of chart. It's like impossible to trade Monero. And let me hold back my opinion about Monero for a second. So we'll talk about it in a minute. So let's look at you guys' symbols. Can you incorporate ADR into your indicators? Indicators plural, because you mean ADR or okay, average daily range. I use ATR, average true range, which I'm trying to think, is there a difference? Average daily range, average true. I would say the reason I use average true range is that way I can flip between different time charts. Like if I'm looking at a 1 hour, the average true range is going to be based on the bars. Okay. And then if I look at a daily chart, it's still going to be useful because it's going to be looking at, again, the daily bars. So I do absolutely incorporate average true range, especially in my spike indicator. Like for instance, dollar Chinese yuan, dollar yuan. Uh, these spikes again. So these spikes, you notice how it says ATR clear. That's because I make this uh, signal, this indicator fire whenever price breaks the previous high by a certain average true range. And so essentially, in the spike indicator, definitely, because what I do is like, here's of course the prior high, and then this high right here is 89% of average true range. I think I probably use the last 26 bars, just an Ichimoku holdover that I use. So basically this distance right here, this is where I do use, in fact, absolutely, the average true range, because I want that to be significant. Like my rule is I don't take a spike reversal unless that ATR clearance is greater than 80%. Okay, so not 100%, not a full ATR, but yeah, that's definitely how I use it. And I think the reason I really like using ATR is because it normalizes everything from chart to chart, from different assets to different time periods as well. And so, like right here, we're looking at a foreign exchange between the dollar and the Chinese yuan on the weekly, and that works. And then another trade that comes to mind that is live and going on right now is the 30-minute trade from way back in July. This was on Agilent Technologies, still long the stock from that point, but it was classic signal. Let me clean this up a little for you guys. So it's a 50% of this big trend up. Let me take this off a little. So I like that charts to be not busy. So in other words, um, from I always want to take a spike at a level. And of course, this is, the trend, the bottom here from April on Agilent to the top here in July. And of course, this was a 50% pullback. And of course, you had a spike, a morning spike. Love these right here. That's from, and of course, this ATR clearance was 416%. Again, this is a 30-minute stock chart. Same kind of, little spike, but, this same spike setup as a weekly Forex chart. But you see how I'm able to kind of normalize, an indicator based upon ATR because I'm using the average true range, which is based on the chart that I'm looking at the moment. And so that's that. So yeah, you can pull back to a soup 2 times. So yes, I do that. All right, let's look at your symbols while we're going there. K view. Now I've rammed. You have, like, I think you were here last week, Zachar, but so I kind of rambled, and I'm very neutral and try my best to be apolitical about everything. And this is not really politics per se, but it is sort of like corporations bad. K-View was the spinoff of Tylenol, or they put Tylenol and some other things into it, right? And part of the reason it's been going down is because Johnson and Johnson spun it off to avoid some potential liability that they probably knew about in 2023, this autism stuff. So that's how we've entered the realm of politics here. But what I find interesting when I've talked about this in the last couple of weeks, because yeah, a lot of people have been talking about it because this thing's going down. Let me just go ahead and say, I don't know, because it's going down. Actually, this is a I don't know situation. We could use my indicator, but let me finish what I was saying. So what I've talked about that I find kind of, I wouldn't say amusing, but Johnson and Johnson, the former parent company, has confirmed a new all-time high and is in the middle of a breakout higher. Whereas their spinoff company, the one in particular, K-View, which now incurs the liability of potential lawsuits from parents who think that Tylenol gave their kids autism, is now continuing to go lower. So I find that kind of bemusing. There you go. Is that the word? Is that the word? I'm bemused by it. So let's use my new toy, the Sigma bands, to see, based upon, we don't have 180 days. So we're going to have to go back and we're going to have to look at, do we have 60 days? Let's do 60 days, 2 months. That should incorporate 2 months of equity trading. Yeah, that's barely what we can get. And so, uh, what are the bands? Yep. All right, let's do that. So, if I were going to try to, I don't know if this really works. You're trying to catch falling knives when you don't see. There's no past price action. I want to see some kind of past price action that I can go off of. Okay. I haven't really sat down. I actually use this on Sarepta Therapeutics. This whole leg down. This position that I kind of hate, but it didn't really tell me what the bottom was when I went through it day by day. It just when something's tanking, it can just keep going. But if we had to, let's see what the 60-day. In other words, this would be because it's 60. No, this is weeks. Okay, hold on, hold on, hold on. Hold on. Okay, daily. Okay, do daily. Now we can do 6 months. We can do something else too. Actually, 252 divided by 2, 6 months of a stock would be essentially 125. So let's do that. 125 would be 125 trading days. Let's do that. Okay, and we'll ship those forward. Okay. All right. So our 6-month volatility, which has definitely increased. I bet IV is actually very high on this too. Implied volatility probably has options, right? So yeah, implied volatility is probably extremely high on this. Um, that's one thing you could do is let me bring that up real quick. Give me a second. Bring my thinkorswim. So I've got my indicator for implied volatility on there. One thing you could do, and this is already kind of priced in options, volatility, because implied volatility is the market participants looking back at volatility and then projecting forward what could possibly happen and then pricing options according to that probability. So it's all kind of baked into the price of options, but it does come with it's baked into it. It's priced in. It's priced in. All right, let's see if I can get this to come up without having to do much funky stuff. Okay. All right. Oh yeah, there we go. Okay. So, all right. This is my thinkorswim. Don't They don't have implied volatility on TradingView yet. I don't know if they will or not. But in the bottom, I have a little indicator here that shows me, kind of color codes it. So let's see. I bet that KView's implied volatility is very high. Yeah, yeah. So color coded, pretty easy to read. The line is the implied volatility, and the red means, and what we are right now is that the IV percentile is 96%. That means 96% of the last 252 trading days had less implied volatility. So it's in the 96th percentile. The rank, in other words, if you rank it, it's 77. So it's kind of two ways to slice it. It's high. It's high. So that means that options are expensive because they're pricing in a big move. And that also makes sense because you have lots of down moves here and here. If I had to really refresh myself on that options pricing, but we could probably draw it out. I bet you that the option pricings would sort of paint a picture like I'm doing now with my indicator for where this thing could potentially go. So, all right, we're going to go with that and say that for the next 6 months, this thing with a 68% probability is going to go between 19.8 and 11.36. And so if you were looking to kind of scoop it up, I don't know if it's going to be very useful for that or not. But uh, but yeah, 11.36 would be the next potential bottom, I guess you could say. But to do a recovery, yeah, 25.97. Could potentially use it for that. Could possibly use it for that. So, all right, let's see what else to look at. I mean, I love getting stuff that's dead. Here's what let me go back to my tried and true methods for picking up something that's quote unquote dead, and I don't have a bottom. If you made me do it, if you made me do it, I would look for like a spike bottom, like I like to look for. And so you didn't really have one here. Let me clean this up a little bit. So what I would have wanted to see was for this big move down here on Thursday to have come up and closed back inside the red line. Okay, that's the Tinkinson from Ichimoku. That's what I use for my spike indicator, sort of my trigger line. Really want to see like some kind of like if this was the last leg down, I want to see it potentially recapture this 1550 and then launch from there. That would be how I would try to long this thing. I don't want to catch the knife, catch the falling knife, like while it's still falling because that can hurt. But I want to see some kind of uh, strength. Like a recent example of how I used that, which took quite a while to pick itself up, is that was in Intel. So Intel, and of course, this is not like a slam dunk. Like, oh wow, you picked the bottom. No, clearly not, because with Intel, what it also did was, back if you guys can remember, last summer, July, I don't remember what it was. They had some bad earnings. But of course, the product cycle for chips is much longer than a quarterly cycle. And fortunately, I have friends that are smarter than me that know the company that were just very, very bullish. And so when this happened, they were a little bit, they wouldn't say they're despondent because they're a little too autistic in a good way to be worried about prices. They were just like, no, I see what they're doing with, their processors. It's great. I just don't know what's going to make them any money. I was like, okay. But I took a look at that and I waited for, okay, we get back in September, October, get above here and buy this at basically that Tinkinson level. Basically, get a little bit of a up move, get a little bit of buying, and pick it up there. And that's where I was able to pick up Intel and basically wait in it for quite a while, over a year almost, until a little fake out there. Fake outs are good. That would have been good, but I was already in it. Um, patiently waiting. But you see, the point is, I wanted to wait until we got that little bit of an oomph before I started to go long, because then you at least had a potential this thing had stalled out. So now here we are today, and we're at 38.20 on Intel. But picked it up. Like I said, I like longer term things, but picked it up when we saw a little bit of strength. Did it work immediately? No, but at least we didn't try to catch the falling knife as it was going down, because that's where this is where you would be doing some knife catching, right? And you didn't really do that nice slow down and kind of pull back kind of thing. So that's just one example. So going back to K view, I don't see I don't see what I want to see just yet. In fact, if we look at the weekly, we still got to have time for this Tinkerson to move down so this thing can get over it. So just keep watching it. Keep watching it. I'm willing to miss it, okay, to get some confirmation on it. So we got time. Put your symbols in. Hey, it's like any stocks. It's a long term thing. Like you've had Nvidia longer than me, Zygor, but I picked up a good bit of it back in 2021, basically during that whole craze of tech stocks. 2020 when everyone got their stimmy checks. That's where I picked it up. So I've only been there for about a half a decade. But yeah, I mean there's no reason to get rid of it. There's no reason to sell it. So. I mean, it's killing it, but ultimately, Intel, I just, the techs, I did sell tech stocks a few weeks ago. The tech stocks that I sold off were Google and Palantir. And that was really because they had become such large weightings in my portfolio just by the fact that they've been going up so much. But I think the tech hardware, I'm comfortable hanging on to. So right now, I'm not really I'm not shorting the AI hype, but I am less bullish at this point about the let's call it the software hype, and I'd rather be in the people that are selling the shovels to this gold rush. That's usually a good bet. It's usually a good bet. All right, so let's look at some stuff. AMN from Jeremiah. So yeah, we got okay. AMN Healthcare. Hey, you've been listening. Hey, I must have looked at this at one point because we've already got this marked up. Oh, oh, oh. This is what I want to see. This is good. Did we look at this a while back? I wonder when we looked at this. I think probably, yeah, probably we looked at this on, I guess we would have looked at this on, this is a weekly. Okay. Yeah. So we were probably looking at this a weekly a couple of weeks ago, back when I was talking about wanting to buy healthcare. And I am remiss that I seem to have missed this optimal 1804 entry. And it's really good because Jeremiah, you got a good eye. You've been listening to me because we're looking at this at the long term, going back to 2004 volume profile level. Okay. And we've got a nice little spike. Yeah. 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 This is good. I like this a lot. This gets, I've been sleeping. I've been lazy. Where's my, I'll find it later. Lost my thing. Okay. I've been lazy this last couple. I've been immersed in some video games. Hey, let's just what can you do? So yeah, AMN. Gonna have to maybe punish myself by FOMOing into this one. But yeah, I mean if I FOMO is relative. I mean, it's obviously at that it's dead point, but we can basically straw up how I want to do this trade. So again, what I've learned from this past year of doing the strategy is we want to find, well, there's the first potential target is there. Of course, that little consolidation range creates the 26.29. But from if I was going to get this as a stock, not seeing much matchup. Basically, what I try to shoot for is 56.85 over the long term, which is fine. That means that if I had to go and buy it now, we know when we're wrong. When we're wrong is if we take out that low that it made in August, and we go up to here. So we can still, yeah, you can still pull more than 3-1 on this one. So it might take some time. Might take some time. Let's do our new toy. Yeah, that's a see, this is a weekly. So weekly, we don't need to have that many bands. How many weeks for do we need to go? So 52. Let's go. Let's do a 52 volatility. One year. Since we're on the horizon, and let's kind of draw out. Let's do it the normal way. Forward from anchor and wise. Okay. So essentially, the two standard deviations would take us all the way, which is it's not the highest probability, but it would take us all the way out to that 50% potentially. So yeah, I'm still working on this to figuring out how I want to use this, if I want to use this. I still like using my 50% some volume profiles. I still like those better. Let's do a volume profile here. I'm pretty content with that 56.85 on that. Yeah, if we probably incorporate the whole patch, yeah, okay. So yeah, it's gonna be 56.85 would be our target on that. So yeah, okay, okay. How long would it take to get there? Let's do 2 years. So let's do 1 of 4 years of weekly volatility. Most of the time, volatility is done by daily, so this is not really entirely the way you want to do it. Yeah, it's fine. All right. What if we did daily on this? Then I'm just playing with my new toy. You guys can too when I publish it. 180, 180. That's six. Well, yeah, it's fine. No, 6 months would be 126 trading days. Let's just do 52. Let's do 1 year. That makes it nice and easy. Okay. Yeah, it's kind of getting in that in the balance. Just playing with it. Just playing with it a little bit. All right. Let's look at some other stuff you guys have. That's a good one. That's a good one. All right, PGY next on the list. Pa- Pagaya. Pagaya Technologies. Oof, technologies. That's got me scared. You got to really sell me on. Okay, okay, okay. I see. You got to really give me a good opportunity on tech, and this is. You have a nice bullish trend, pulled up 26.59. That's looking good. That's looking good. I like it. I like that a lot. That's a good little pullback there to hold. Yeah, let's watch that one. That's good. This is what I love about doing these things. These are great opportunities, guys. These are. It's good. The reason that this is good, just to kind of remind, is you know when you're wrong. So you know that if it breaks the 50% of this trend up, that's when you hashtag not financial advice need to get out, because then you enter into what I call the valley of risk. You don't want to be in this valley, okay? Because then it can just come back all the way and retest the bottom here. But yeah, you have a nice line in the sand. Uh, I like it how it kind of came back, didn't fill that gap. Yeah, so that supports you right there in this trend up, and you can go for another leg. I like it. PGY, it's good stuff. It's good stuff. It is good. Good, Durrani. Very. It's another one from you. Veritone. Ooh, that's volatile. That's I mean, that could pull back to that point, but I really would have liked to see that thing just go more straight up, more a little up and to the right. I calculated the entropy of the universe now into your options. Well, that might be a little stretch, Amory. I don't think you need to add those many variables into it. Um, yeah, so notice how when volatility increases, that band really widens out. Of course, this is a daily going out 6 months. Oof, man, that wow. Okay, so that's pretty cool. Because volatility is so extremely high. Volatility is 157. That's very high volatility, by the way, on this very. Uh, the two standard deviation move is 94, which from here, that is a 1200% move over the. Oh, we did a year. Still, a 1 year volatility. Like if you were looking at options on this, you would basically find that. Well, actually, let's see if there's options. Let's use this trade very. Let's see. We go out one and we pop this out. Let's see how this plays out. So this is so this is the option chain for your vary. Let's just kind of see how this looks. So it is now October. So basically a year out. We don't have exactly a year out, but 448 days. Um, is that the right thing? 706. Yeah. So I'm surprised that I guess it's not a very well traded stock, because what you probably find is you probably find some small bids, like maybe like a 4 cent option would probably be what you'd have for the 90. But just as a real quick, so what was our upper bound? Uh, so delta is a proxy for probability, and so let's do the May. Just trying to validate this and show you how this potentially works. So the delta on the 5 goes 7.5 is 39%. Okay. So May 26, probably right about there. 17.5. Okay. So it's about where that is. Yep. And yeah, so that's the first standard deviation. That's what most options are priced on. We don't need the two. How can we? Yeah. I mean, that kind of actually matches up, doesn't it? That makes a lot of sense. It is based on the last. Yeah, that does that actually. Yeah, there we go. So, is that what should be though, or did I just draw that accidentally? 39%. I don't know. I'd have to do a little bit of checking and going back to my old options, learning about that, to see if like that 39%. I think though that is kind of like the magic number, somewhere in the 30% for that. So yeah, that is how we're priced out that many days within that realm. Uh, can we do? Hold on. Let's see if I can do something here. I think I remember how to do this. Yes. So what this is kind of inspired by is this. You may or may not have seen this. This will be the probability analysis. And so if we look at that's MES. Very. It's very okay, that's better. All right. So if we look at the May, yeah, okay. So that's come on, there we go. All right. So the May 26th, right. So essentially within one standard deviation, it says that it should be 11. Okay, so that's 84% probability, 15. I need to relearn this to teach. You learn by teaching. This is what I'm trying to make happen on the chart. This is based on implied volatility. All right, let's not, and unless I can, let me do a little research and see if I can come back with that. But yeah. All right, let's keep going through your symbols. Okay. All right. You're long. You like that price target, 17.15 by May of next year. It's within the realm of possibility. It is. I mean, I mean, honestly, yeah, if without me having to like dig into the math and everything, um, doing a $100 option on the 17.5, that's probably fairly priced. That's a pretty good trade. That's a pretty good trade. Worth $100, I'd say. I need to start a portfolio that's just based on the last range, just to see what happens. As long as you go long, you're probably gonna be all right. Just about everything. Just you have to be. I mean, asset prices are not going to start going down. The bear, he sleeps. All right, let's see here. Hey, Hain Celestial Group. That is, oof, that's something I like. It's kind of looking dead. Celestial Group. Are they like trying to go to the stars? What's Celestial? Oh, wow, that's oof. What did they do wrong to come all the way back to their 1990s level? I mean, I guess as a price action trader, I tend to not care, but I mean that's pretty wonky. I don't know, man. I mean, that's again. Let's go to the weekly and let's see. Did we get a? We kind of got a recapture here. Honestly, that's not the way I would have liked to have seen it. I really want to see like an oomph and then come back and do it. This kind of just kind of like lazily kind of did it and didn't work. Nah, I'm not seeing what I want to do for a turnaround here. That's a pass on that one. All right, ALGN, Align Technology. Again, it actually did. Like I said, this is where I'd like for it to see, and then pull back and then grab it. But earnings blew that trade up. So you stop out at the low, and now you're just kind of waiting. Where's the next level here? Looks like I marked that up maybe last year or something. Let's see on this leg up here. Where's the volume profile here? There's some minor nodes there. Not really anything there. And then of course down here. The key nodes would be 254. and the next one's at 95. But yeah, I mean, honestly, I would probably wait until I'd probably if I was trying to pick this up, scoop this up, for a bargain when everyone thinks it's dead, it'd probably 95, 75 on that one. A little more dying it needs to do to hit what I think would be a potential long term, it's dead gem volume profile level. Which one's that, Journey? It's a $600 million micro cap doing AI software. It's just, it's AI is the thing this year. I don't want to discount it and say that it's over or it's overplayed, but I've always been kind of the sentiment like when you look at what has been the thing in the past is you don't have to catch it at the bottom. First thing that comes to mind is Amazon. Okay. Amazon was, of course, one of the few, because there were many, survivors of the internet boom. Internet was this big thing many years ago that people didn't quite know. And it was a bookstore. Who's gonna like buy books online, right? Back when it started. And of course, if you bought it during the hype cycle, this has been split many times, but you had almost a 90% pullback if you'd bought it at any point from 98 to 2000 in that 2 year period, like an 89% drawdown. And so, yeah, you could have caught it here and you would have been incredibly smart. But there's been many, many years of things and places that you could have bought Amazon. And the generational low that I tried to tell as many people as I could about because it was rather obvious at the time. A few things were as obvious as, Amazon was, but I mean, what was obvious about Amazon to me, back in 2023, this was even after the, the bear, well, it was kind of the bear. Yeah, it was the bear cycle. Was my fiance is not going to stop, uh, sending these Amazon packs. Every day there's a new Amazon package or three. And when it pulled back 50%, it was basic or to excuse me, a 50% level. Um, in 2023, the beginning of 2023, December 2022, Amazon was down. It was half off. It was a 50% discount. This was just 2 years ago, less than 2 years ago. And it was 2 years ago. Um, you had this 50% haircut on this company that it's not going to die. It was severely undervalued and it was at a technical level. And of course, that was what you call a generational bottom. It was basically from the low all the way back, and actually it was a low from all the way from the low of 2001, if you want to draw from there, back to there. But so the point here is that the thing in AI, yeah, you could catch it at the bottom of whatever's going to be big. But you're going to see this thing go up. And if you just kind of remember, hey, I want to buy this thing, when you get a little bit of a signal, you're still going to make money at a much less risk of it going to zero. So that's what I like to do. All right, let's see. Is that all the ones we looked at? Okay. I think that's all of them. So yeah, I'm going to actually, before if you guys got some more questions, post them in the chat so that I don't step away and not do it. I'm going to go ahead and publish this. All right, so we're going to call this. That's going to be it for life, unless you guys have something else for me. So we're going to publish this script, and I'll share the link in the chat at the end here. So what do we call this? Sigma volatility bands. I want to make sure that document it. So let's on this indicator display um bands of potential price of future price based on historic realized volatility. That's redundant. Historic realized volatility is redundant. We'll put that in to be explanative. This can be used for finding price targets where there is no past price action to uh, so this model, let's see what different modes do we have on this. Oh, come on now. There we go. All right, so inputs, look back, number of bars considered, two forward bars, AMD had a similar moment to Amazon for you at 75. AMD was a really good one actually too. Can I do this while I'm still typing this in? Oh, yeah. Did that hit a good level? Let's go for it. So if we were doing the pullback here, actually, let's play around with this a little bit. So no, that one would have been there. A lot of volume there. Let's do it. Oh, that's a monthly. Let's do it weekly. Let's do this. Let's say we were sitting here. Let's go from the beginning. Yeah. So once we got to that high and we go back to here. Oh, 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 oh. That's good. I like that. So that's a weekly. That's a weekly. Just out of curiosity though. Oh man, that's really good. That's basically buy anything in April, you've been good. But yeah, it's backed up by volume profile for sure. That's really good. Let's just say, oh, let's do this. So January of 2025. Let's go back to the first start of the year. Let's use our Sigma bands. Let's do a 6 month. Let's just do 125. Do that. And we'll see. Yeah, so basically the 6 month would have put us in there. What would do the 252? I haven't really figured out which one I want to use. Probably it's going to be a year because it'll project it out for a year, but that's a little long for looking at things. But it's still within the range that volatility historic volatility would have implied for the next year, is where that 80-82 level was, if we looked at the beginning of the year. So what this would imply, we'll separate this from implied volatility because that's what options are based on. What this would suggest is that at the beginning of the year on AMD, price should have ranged between 74 and on the upper end 194. And of course, as we now know, oh, I should have marked that off because that draws forward. Actually, we can do this. Let's do the other way. What's up, David? Okay. Yeah, so it would have boop to boop. Okay, so within that range, that's what we were going for. And of course, that ended up being our level there for AMD. Now the top end of it. Well, let's do this. Let's go back and let's use this as an example. So if we went back to, let's say we bought it at that point, volatility has increased, so it has expanded on us. Then our target would have been about 162 on our long from 80. So basically a 2x, a 2x trade. We probably want to hold AMD longer. Yeah. Pretty fair. And of course, I wonder where that second standard deviation is. 2, that would have been about right here. So this is, of course, if we were to grab. So yeah, if we were looking, all right, yeah, if we have bought it, if we were smart and we were super, not lucky because we picked it up back in April when Trump said this is a good time to buy. And we were holding this thing basically before uh, April of next year, we would be looking at a target on AMD of 270. And that would be a fair target. And then if it hits that, we can update it further. So yeah, that can help us set a good target on that AMD actually. Uh, one of the uses I wanted to kind of. What's up, David? Holy crap, 8% today, dude. It's a bull market, man. I think though, let me just make some commentary on this. What is it? My favorite quote, bull markets are born on pessimism, grow on skepticism, mature on optimism, and die in euphoria. So where are we right now? I think we could still be in either skepticism or optimism, depending on your opinion, your persuasion, your political affiliation. So we're somewhere in the middle. I don't think we're in euphoria. And so I think we just grind up. And all the things that have been grinding, I mean, there's nothing scary going on in the world right now to bring things down. Just nothing. There's nothing fuddy out there that we can cite as a reason for things to go down. All right, let me finish my. Let me publish this while I'm still working on it. They got you. Well, what did we learn? Did we learn anything about leverage, David? I don't like leverage. I don't. Yeah. Talk about the parabolic moving gold as it relates to the collapse of the dollar when Venezuela. Well, just since you brought it up, uh, dollar is actually, it did a false breakout to the downside back in September, early September, and it's actually starting to go. It's stable, but it's not going down. The dollar is versus other currencies, other world currencies, is not collapsing. It's actually starting to get stronger, slightly, relatively, versus other currencies. Cross margin 15x with zero liquidation is the move. I am so far removed from that world of trading. I honestly don't know what that means anymore. Actually, I always had a trouble figuring out margin because I'm not good at math. Like, I mean, I can do math. I mean, I have a brain, but my brain doesn't just automatically know that if I have 15x cross margin, where my liquidation point is. Like, I would rather just, I would, what, because people would take these leverage positions. I'm like, why are you taking on 100x leverage? Like, oh, but my liquidation point is here. So what is it? What can that do to your account? It's like, oh, it's only $100. It's like, how does that work? Well, math. I'm like, just no. Long, short, the most leverage you want to do most is 2x, especially in crypto. I mean, in crypto, you can have what you had like just a couple of weeks ago in Bitcoin, you had a 10% move down. If you had been 10x leverage, you would have wiped out your account. I think probably working your job and like doing measurements all the time and working with numbers makes you a lot smarter than do that kind of stuff. So I just can't figure it out. If it's either going to be 1x leverage or maybe 2x leverage, or I'm trading options and I'm not even thinking in those terms anymore. Your 2x is what got liquidated? Well, there you go. 2x is too much. I've always thought leverage is like just because you can doesn't mean you should, and there's really no need for leverage in crypto unless you're just gambling. That's fine. That's entertainment. But yeah, crypto moves so much. Why do you need leverage? I mean, you're trying to get a 10 bagger, right? When you buy any kind of crypto. I mean, I know why. It's because you want to take, like people want to take like $1,000 and turn it into a million. And you can, but you're more often going to just lose $1,000. Okay. All right. Well, let's see. Do I like that for my, uh, don't want the historic volatility on there. Let's see. Let me draw up my chart for Bitcoin if I'm going to do. They got everyone. Biggest liquidation event ever on a Trump tweet. Well, I mean, yeah, I mean, I think there was definitely a liquidation event because a lot of people thought that crypto was breaking out, but if you just follow the simple guidelines of looking at false breakouts or successful breakouts, I talk about this all the time. What you want, basically that you okay, you didn't know that it was going to happen that Friday that Trump tweeted, but this is the week before. This is a weekly bar of Bitcoin the week before. This is the September 29th weekly bar. Here is the past all-time high. Here is that weekly bar. They did what? They came up, made a new high, and then closed back inside that last all-time high. That is a failure. It's a failed breakout. What does a good breakout look like? Well, a good breakout looks something like this. A good breakout is this. This, like it did in November of 2024, big green dildo bar right up into new territory. That is a breakout. That is what you need to see. Leaves no question in your mind, were people buying more of this or not? And up it goes. Okay. But in many cases, like for instance, even back in the beginning of the year, hold on, that is a failure. Little wonkiness, but came down, pullback. Back in November of 2021, again, there's the all-time high, failure. There's a new all-time high, failure, and then down it goes. And so it's really, really simple. You have to have a big green dildo bar at a new all-time high for this thing to go up. And so a lot of people, I remember I was in the Bitcoin chats and they were all, just each other in a big circle, when price came up to 126. And I, of course, have to be the troll that I am. I come in and I said, no, this looks bearish to me. Like, how can you be bearish? This is the highest weekly close ever. Trying to speak the language as if it matters, because they don't really care about price action. This thing's going to a million. They don't need to do anything with price action, right? But people that thought they were smart and clever bought in on leverage on the breakout, thinking this is going to be the run to a million. And yeah, of course you're going to get liquidation in that. And so it's not that you knew Trump was going to tweet, but you knew on that Sunday close. Where's that Sunday? Right here. You knew, you should have known. One should have known. I say, I don't know if you did or not. One should have known that this foretold, or at least made you not go long. It wasn't there. People didn't buy it. They didn't close it higher. Atom went to zero. Yeah, the alt season didn't happen. Data shows Binance pulled liquidity on all. I don't. You don't need. Again, I don't need to hear the conspiracies after the fact to go back and justify it because I can't make money. Where I can make money is seeing this failure right here, looking for it to happen again, and then trading based on it. And whatever Binance did or didn't do, or whatever people tweet about, is entirely after the fact, and you don't make any money on. It's just, how do I make money on that? I don't. I make money by looking at either a breakout that happens or a breakout that doesn't happen. Okay. Um, since you got me talking about crypto, I don't know if I've shared it, but I've told you about this. Like, I've been trying to tell you and everyone about it. What's my favorite crypto, David? What's my favorite crypto? You guys know. Thank you, Zygor. It is your long trolls. Okay, like troll all him, my little stockbroker troll. So that guy right there. They made a little dancing video of it. Philosophically, I love Monero because it's the only real privacy coin that's out there. But whenever you have situations like this, where it's sort of like, okay, here's the high from October the 26th, just in the interim, there's Bitcoin. There is the high on Ethereum, hasn't recovered the 50% yet. Here is the high to the low, well above it. Just the relative strength in every situation. Whenever I point out to people that year to date, what is Monero up? And I have an explanation for why it is performing as it is. I mean, the main thing is that it's actually useful. People actually use it for transactions online. We're not going to go into what kind of transactions, but they use it. It's up 66% year to date. And Bitcoin, the big Bitcoin that's going to take over the world and become the monetary standard, or what is up 18%. You're still making money. But why is it up so much more? Well, because it's a much smaller market cap. I was actually going to talk about this. Hold on, let me find it. I was actually going to talk about this, but I decided to do my volatility thing instead. Let me see if I can find it. My YouTube feed, my Twitter feed is typically has a lot of crypto related stuff because that's what I do. But let's see, where are these little podcasts that he does? Oh, it's the coffee. Some people like him, some people don't. But here we go. The iced coffee hour. So this week they had this guy on here, and I'm getting to be a little bit old, and that whenever I see someone that's like clearly like younger than me rendering financial advice, I'm just like, like, of course, yeah, 100% or $37 trillion reset. Where was the thing that he was talking about? This is what came up in my feed. No, I don't want the latest popular. Where is it? Is this guy? Is this guy right here talking about how everyone's early right now with Bitcoin, everyone's early with Ethereum, and maybe so, but it's sort of like when you get to a point where social media is just flooded with an asset, doesn't matter what it is, not different. That's categorically not the time. And see, where are we at right now? What is my reach? All 12, all dozen people that hear my voice. I'm trying to get people to understand that this is an actually useful cryptocurrency that continues to outperform in these malaiseful cycles. Does it have the same 12, 14-year performance? No. But it is beginning to outperform pretty significantly. And it has actual users. And it has been banned, or has been attempted to be, it is banned in a lot of places. It's delisted from exchanges. They recently had some FUD about the network being taken over. I had this conversation with a big Bitcoin bull friend of mine, because this was, a couple weeks ago, back in August, when we had this, FUD, fear, uncertainty, and doubt that people were trying to take over the Monero network. And I was like consuming all the information I could because it's my thing. Like I want to know about it. Right. And so when this happened, I was reading all about this, like, oh man, this is some scary stuff, roll ups and, when was it? Selfish mining and, reorgs. Ooh, reorgs. Oh, scary, 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 scary. And so when it came to this point, when it was at like in hindsight, a discount at like 250, like as bullish as I am, I'm not going all in because I'm reading the news too. And so I was having this conversation with a Bitcoin friend of mine, and he said, hey, life's going great. I really want Bitcoin to pull back because I'm making good money now at my job. And like, this would be a great time for me to buy a Bitcoin. Like, I told him, like, you how do I explain this to you? Because it's all about emotion. You can't really logic someone to this kind of thing, but you just have to understand. Like even I was scared a few weeks ago about like my number one pick. And so I didn't go and take every dollar I had and buy the thing, right? Why? Because I was scared, just like the market was. What you have to understand is that when and if Bitcoin or any asset, Nvidia, whatever, pulls back, you'll be scared too. You won't want to buy it, just like the market doesn't want to buy it. And so it's just people just can't really logically understand that when I explain it to them. You kind of have to feel it. But this feeling you have now, looking at like the price of Bitcoin at 110,000, thinking like if I said like, well, if Bitcoin dropped to 67K, like how would you feel? It's like, oh, I buy it. It's because you're living in 110K world, 110K emotion, 110K Twitter, 110K uh, broader macroeconomic picture. And so when the price in your head is 110 and you think 67, that's a discount. But you have to understand that the market emotion, something has to happen within everyone, including you, to make it now be valued at 67. And then at 67, having come from 110, you also are listening to whatever people are saying that has made it come down to that price, and you will not want to buy it. And unless you're super, super, super disciplined and you're just kind of autistic about it. Like I didn't buy none, but it was a very serious threat to the network that brought it down to this point, which has now been abated. And of course, now that it's abated, it's returned back to its sort of little equilibrium range that Monero likes to do. And so what I think I'm trying to make you understand when it comes to every other cryptocurrency, whether it's Bitcoin, Ethereum, anything else, is that it's all a confidence game. And the only way you're going to get a cheap Bitcoin or cheap anything, cheap Nvidia, cheap stocks, cheap anything, just like we had back in April, is when confidence goes away. And then in that moment, because the market is made up of everyone and you are everyone, it's going to be really hard to buy at that price. So, all right. Good to chat with y'all. Hope you took some from it. I'm going to make this indicator. I'll post it in as a comment, actually. That way you can check it out or come on Discord. If you like this live stream, I'll make sure you to like it. And I'll do that one next week. I'll do it anyway, but hope to see you guys then. But good things to look at this week. AMN, PGY, and VERI. That's good things to look at next week. So market continues to grind up. Trade wisely. See you guys later.